Thanks for joining this panel. So today we want to discuss innovation in customer-centric field, especially in financial services. Now the idea here is we know that technologies like AI and blockchain have been transforming this sector, in particular financial services. So we have here two experts in innovation, and we would like to discuss the role of the state of the art of innovation in financial services and beyond, but also the role of governance. Is it governance speeding up adoption? Is it a challenging aspect of adoption? So for that today, we have two and I will let them introduce themselves, maybe talk a little bit. Their career has led them to intersect and to interact with the financial services in their transformation efforts. So Iliana, probably we could start with you, and if you could introduce yourself.
Absolutely. Hello, everyone. Iliana Oris Valiente. I'm a managing director at Accenture here in Canada. I'm responsible for our innovation strategy, which includes practices such as our blockchain team, and I also work very closely with our team in AI, data science, and a number of other multidisciplinary groups. My background actually is from more of the blockchain space, but today blockchain is a key enabler for a lot of the work our clients are doing across industries, including in financial services, but my aperture is much broader than just blockchain. So I'm delighted to be here today. This is great, experiencing virtual conferences. This is us living innovation.
Great, thank you. Alex?
Yeah, thanks, Manuel, and thanks to the National Crowdfunding and Fintech Association for being flexible and putting on this event. You know, necessity is the mother of all invention, and I think they've done a very good job with this. So my background, like Iliana, is actually also on the blockchain side. Before that, in another lifetime, I used to work in the financial services industry for 8 years in investment banking in Toronto and New York for a firm called Canaccord Genuity. I left that to write a book called Blockchain Revolution with my father, author Don Tapscott. That book ended up becoming the best-selling book on the subject. It's been translated into 19 languages, I think, and sold around 500,000 copies. And with that as a foundation, we've gone on to do lots of other things. We've released a few other books, Financial Services Revolution being the most recent one, and I think the one that's probably the most topical to this discussion. But we also together manage an organization called the Blockchain Research Institute, which is the largest independent blockchain think tank in the world, and it's supported by many of the world's largest companies and organizations. And we have a faculty of some world-class researchers as well, including Iliana, who has a very, very busy day job at Accenture, but managed to find some time to contribute to our work. So we're very grateful for that. And I'm looking forward to this discussion. So thank you.
Yeah, thank you both. So everybody has, I'm sure that we have heard a lot about how technology, AI, and blockchain is supposed to change our lives. Ever since maybe 10 years ago, we started seeing AI achieving performance in different tasks, like recognizing images, recognizing patterns, and then there was the success of Facebook, Google, leveraging the data and the digital footprint that us as individuals are living in the digital world. And everybody was excited about how was this gonna change the way we interact with others and with services, in particular financial services. But I'm beginning to feel that people are still waiting, and somehow it's not coming yet, at least to the full extent that people were expecting. That's my feeling. That's the feeling I have, and I would like maybe to hear where the adoption of these technologies, blockchain and AI.
Well, thanks. That's a very good question. And I think before we go on, we should just clarify what we mean by artificial intelligence. So there are two kinds of AI, symbolic AI and machine learning. And it's machine learning, I think, that most people sort of associate with this growing technological phenomenon. basically the idea that with large, vast sets of data, you can run machine learning algorithms to interpret that data, but also to improve and teach the computer system how to read that data. And from there, you can create all sorts of outcomes which can improve, people's lives in all sorts of ways. And you mentioned that you feel like maybe it hasn't reached its potential, and I think that that's true. I think that because the potential is quite profound, right? There's the ability to discover new cures for diseases, the ability to, put machines into space, the ability to solve other kinds of intractable problems. I think AI holds the potential to do all of that. I would say within financial services, the two technologies that are likely to have the biggest impact are artificial intelligence and blockchain. Now, I think normally people think of them as existing in two different silos, right? If you had a Venn diagram, there would be two circles and they'd be kind of apart. But actually, I think that the two are not only related, they're ultimately going to have to work in concert in order to achieve the maximum benefit. So most of the data today that's run through AI, so to speak, is controlled by a handful of very large corporations. They're called the FANG stocks, but there's a couple of others in there. It's usually Facebook, Amazon, Apple, Microsoft, Google, Netflix, I suppose, as well. But that's not as relevant for financial services. And that's problematic because it means that lots of other companies can access that data to interpret, to run these kinds of programs and to address all sorts of problems. Within financial services, I would say that the state of innovation today is far behind where it is in many other industries. We hear a lot about fintech, and that's an exciting area, but fintech is really just digital wallpaper that is concealing, in many respects, an industry that hasn't had a real systems upgrade in decades. So, when you tap your card on a card reader at a Starbucks, you may feel like there's a digital payment that's happening, but the dollars are not going from you to the merchant. They're going through a system of intermediaries that would include multiple banks, a payment processing company, and others. And the transaction doesn't take an instant. It takes days to clear and settle, and it costs the merchant fees. If you think about stock trading, we can go into our Robinhood app, or we can use E-Trade and buy shares in the company. And we can see that the transaction clears instantly, and we might think that we actually own the shares, but we don't, right? The settlement period for that is T+2 or T+3, which is only slightly improved from 30 years ago. So the pace of innovation in information industries has happened at an exponential rate. When it comes to value and assets and money, stocks and bonds being kind of prime examples of that, the pace of innovation is very, very slow. But it's these two technologies that are going to allow us to rewire the entire financial grid. It's not about building new digital, putting up new digital wallpaper. It's about fixing the plumbing and the electrical systems of how the industry works, to stretch this metaphor a little bit further. And that's what's really exciting. But today, the pace of innovation leaves a lot to be desired. And there are lots of reasons for that, which I'd be pleased to get into. But I'll put it back to you.
Yeah, thank you. I think I agree with you. It's financial services now. There's technology there, but then it's true. It's patches. It's fintech companies that just patch with technology on an existing legacy system, and that you see it more. For instance, when you're trying to open an account, right? It still takes a long time when you compare to how fast you can buy things on the internet, to compare to how fast you can open an account or get a mortgage. Then you see the differences, right? Maybe Iliana, in how Alex gave a good perspective on how innovation is being adopted in financial services. What would be your take on that question, especially if you can compare that to other sectors, adoption of technology in other sectors?
What we've seen through COVID and this pandemic is that innovation, the pace of it has really accelerated. And if we were to survey a number of executives today and say, hi, what's the biggest driver of digital transformation for you? Is it, the CEO or the CTO or the CIO? And there's a great meme circulating around this online. The answer would be actually COVID was probably the biggest accelerator for the change that we're seeing. We, Accenture, recently did a survey, the Consumer Pulse survey, where we asked people how they've started to adopt new programs and tools in their life. everything from shopping online more often to making purchases inside of apps that they're using, such as Instagram, home delivery, using virtual chat agents or the call centers when they talk to a financial institution or they talk to a retailer. And what we've seen is that there's obviously a very high rise in people doing that. But what's even more interesting is the proportion of consumers that we've surveyed that expect to continue to use these new omni-channel ways of engaging with institutions even after we're through the worst of the pandemic. So I'm actually going to just look at my notes quickly and share some of these stats that I thought were super powerful just for the sake of completeness. So for contactless payments, right now, 55% of the consumers who responded are using it, and they expect 87% of consumers will use that going forward. For shopping within social media platforms, currently the stat is at 43%, and that's poised to increase to 83%. So as we think about financial services and this idea of banking and financial services as a service, as a platform, that is only going to continue to increase, where financial institutions are recognizing that there's a lot of value in the underlying infrastructure that they have developed, that they can now find new, unique ways of monetizing. And it's not just innovation that financial services companies are using for the sake of their own bottom line. It's actually very consumer-centric innovation because it ultimately makes life easier for consumers. Although through the pandemic and just in general, I think it's really important that we not just focus on what people are actually doing today, but what are the thoughts and feelings that are going to influence their future behaviors. And in the research that Accenture has done, we've actually identified two extremes of the human mindsets that I think are really important to consider. So on the one hand, we have the people who are on the edge. They are the most concerned about their health. They're the most concerned about their financials. And that's about 20% of the people that we surveyed. And of course, you can imagine that that part of the population is thinking about reducing their budgets, increasing their safety nets, and reducing any unnecessary spend. However, on the other side, you have the consumers that we've classified as YOLO consumers, and that's 17% of the ones we've surveyed, and they're focused on living in the moment and increasing their spending. Across all of the consumers that we surveyed, there are a handful of trends that have emerged that are just undeniable, and one of those trends is around sustainability, where a third of the consumers that we've surveyed have said that through COVID, their shopping habits are forever changed. They're looking at purchasing more local products. They're looking at reducing food waste. They're looking for new creative recipes and experimenting at home. So I thought that was an interesting trend. Another trend that we've seen emerge is a reduction in trust towards institutions. And consumers have a much higher set of expectations that they're holding organizations to as a result of this pandemic. So there has never been a more important time, if you're a financial institution or even if you're a smaller startup in Fintech, to continue to increase the trust between you and ultimately the consumers that you're servicing. So those are just some of the interesting things that we're seeing in the market.
Hey, Manuel, if you don't mind, Iliana, just a question for you. I'm wondering if this came about in the data. So people talk a lot about the so-called Techlash, that we're concerned about big technology companies and how much control they have. But a lot of the surveys I've read recently is that people are actually really grateful for something like Amazon, for example, which has been a really essential bridge for people who are stuck at home, right? I'm wondering if in the survey that you've done, was there anything on the banks themselves? How has trust or people's view of banks changed or not changed during the pandemic? I don't know if you have any. I don't mean to put you on the spot. I'm just curious based on the research.
Actually, this is an interesting stat that we had pre-COVID. I don't know how it has changed post-COVID. That would be interesting to assess. But Canadians actually view banks far more favorably than people across the world. It's an interesting implicit trust that we seem to have had. So I'd be curious to see how those stats may or may not have changed in a post-COVID environment. But to your broader point around the Techlash, I absolutely see where you're coming from. I actually did a talk on this not that, actually, I was going to say not that long ago, but it was in February, which feels like an absolute eternity ago. And it was really talking about this idea of the tech clash. And it's more of a mishmash of expectations between what consumers want from a data privacy standpoint, from an inclusion perspective when we're designing products, and what businesses are actually delivering today. So it's not a backlash. It's not as though consumers are saying we don't want technology, we don't appreciate technology. We've certainly seen through the pandemic, people are very happy that online delivery is an option. I know personally, through the worst of the pandemic, I was certainly limiting my grocery trips as much as possible. And if I could leave my house once every 2 weeks, that was great. That could not be accomplished without technology. But do I, as a consumer, still have an expectation that, you know, my data is not being resold without my authorization, and that GDPR and some of those other compliance rules are being followed? Absolutely. As a consumer, was I overwhelmed with the bombardment of emails that I received from every hotel I've ever stayed at, every airline I've ever traveled with, every retailer I've ever purchased something from, with sometimes tone-deaf emails and sometimes really great examples of corporate communications that shows that they care? As consumers, I think our patience is really drawing thin for those that we don't think are taking our needs seriously.
I think you touched two very interesting points, and I would also be very curious to know what's those numbers look like for banking. But I think you touched two interesting points. One is opportunity, right? So the current crisis, it's changing completely the landscape, and that means a lot of opportunity for transformation. And I'm sure that's going to speed up adoption in financial services in particular. The other point that you touched is trust, right? So whenever there's a new technology, then there has to be a period of adaptation and building up the infrastructure that you need and that you require to deploy this new technology, right? A good example is aviation, right? The aviation industry, they have been building planes for decades, and these are planes that are supposed to fly and not to kill people, right? So that meant that there's a whole infrastructure and regulation that has to be put in place so that there's trust, right? Technology like AI and blockchain, it's very recent, and I feel, and some people agree with me, that setting up that trust that links to governance, right? Setting up the right pipeline of decision-making process where the boxes have to be checked and accountability has to be placed somewhere. So how do you see the role of what we call governance in adoption, right? Is it the big challenge, the only challenge, the main challenge? You address some of those issues, Iliana. What's your take on that, Alex?
Well, it's obviously a very topical question, and I think that the subject of governance is one that we should be thinking about hard, not only as it relates to new technologies, but to the way that things work today. I mean, Iliana said, sort of defined quite eloquently what the trade-offs are between, you know, data privacy and between functionality, and I think that it's how the things have gone for a while, but it's a false dichotomy. It doesn't need to be the way the world works. We should be able to reap the benefits of technology without trading away our data and our privacy. And in fact, blockchain in particular holds the potential to help us overcome that. And ultimately, it comes down to a question of identity. You know, the fact that every hotel you stayed at and every company you've ever interacted with and every website you've ever visited is able to email you with some note that may be a bit too personalized for your own taste, is an example of the fact that the digital self is not actually controlled by the individual. Your digital you is owned and controlled by big companies, mostly big digital conglomerates and social media companies, but also your government, your bank, and so forth. And it turns out that the digital you knows more about you than you know about you. You may not know where exactly you stayed and what you bought and what you said and who you interacted with 1 year ago or 2 years ago, but the digital you does, and that's problematic. And it's problematic because it means that we can't monetize this data, right? We know it's very valuable. The market cap of Apple just surpassed $2 trillion today, and people think of them as a product company that makes hardware, but really they're a services business like every other tech company. it means that we can't use that information to organize our affairs. And then the most troubling thing, obviously, is that it can undermine our privacy with all sorts of really negative and unintended consequences. So what blockchain promises is the ability for individuals to take back sovereignty over some or most or all of the information that they create from their interactions on the internet. And let's move it into financial services specifically. So when I buy something online, let's say I use Instagram, I see an ad pop up and I want to purchase something, it's not really necessary that the merchant that's running on Shopify that has relationships with banks, it's not necessary that I give all my information to like 6 different companies just to buy, some toilet paper off of the internet. All that's required is that the merchant knows that I have the funds, right? If you go into a store to buy toilet paper and you use cash, the clerk at the store doesn't ask you for your driver's license or your social insurance number. They just need to know that they have the money. So for lots of interactions, all that's required is proof of payment. And that's something that's possible with cryptocurrencies, which are becoming increasingly ubiquitous. And we can get into that at a later time. But in financial services, there are certain instances where your financial bank, intermediary, what have you, does need more information. So if you want to get a life insurance policy, for example, or you want to take out a mortgage from a bank, they do need to know more information about you to make sure that you're either a good credit or that you're not a smoker who's overweight or God knows what. But that's okay. What really matters is that the individual can provide informed consent to provide that information. Now, on the question of, let's bring it back to governance. On the question of governance, I think people conflate governance with governments and with regulations. And there are lots of regulations that exist in the world today that do serve a useful function. You mentioned aviation. There are really strict regulations around aviation, which is a really good thing, because we don't want anybody being able to fly a commercial airliner, for example. But there are other regulations which are limited in what they can accomplish, and some problems which can't be solved with regulations. And so that's where we have to look at the merger or the synthesis of new technologies with regulations. In terms of trusting blockchain and trusting AI, I think like with anything, as people become more familiar interacting with products and services that use that technology, because you don't really interact with blockchain and AI, they're sort of abstractions, right? Products and services that use that technology, then you begin to gain greater trust. And if one of the outcomes of that is that you get to retain more information about yourself and maybe even make some money off of it, then I think you're probably more likely to trust it than you are the companies that operate today.
And Alex, I think the onus really is on businesses when we think about this topic of governance, because you're right. It's not as though the end consumer is directly engaging with AI. It's not as though the end consumer is directly engaging with a blockchain, bar some instances. And for a lot of organizations, governance is a topic they know they need to tackle, but it's not necessarily the topic that they always give the adequate amount of time to. And there is that discrepancy that we absolutely need to be bridging. And I'm having conversations regularly with clients around this idea of being a responsible business, which means thinking through the consequences. Sometimes it's positive consequences, sometimes though it's unintended negative consequences of any decision that they make, whether it be an investment in AI or blockchain, or just a simple interface redesign for their product to ensure that it's still accessible for the broad range of consumers that they're currently tapping into.
Yeah, and Iliana, a lot of big companies who are clients of Accenture or members of the BRI are not really happy with the status quo where large technology firms are the gatekeepers to data, where that makes them, it limits their ability to interact more fully with their customers and also limits their ability to actually create AI insights of their own, because you need vast reams of data to do that, and they're sort of controlled by a few big companies. So I view the idea of sovereign identity on a blockchain combined with AI as a really useful solution to that problem. And just to sort of explain, we've done some research on this and it's a bit abstract, but basically all of this information, all this data that these big companies create is actually created by individual users on the internet. And the promise of blockchain combined with AI basically is that individuals can opt to volunteer or share that data into a data commons. So instead of that data being controlled by a big company, it can exist on a blockchain in a distributed way. And in order for people to do that, you need to hit a few certain criteria, right? You need to ensure that there's privacy and security of that data. You need to ensure that there's quality control of that data, because if the data that's coming in is not reliable, then the insights are going to be not reliable either. And then, of course, I think you need incentives. I mean, people respond to incentives. So if I know that by sharing my data into a data commons that I might get cash compensation or maybe a discount when I go to buy things, then I'll be way more willing to do that. Right now, it's sort of a Faustian bargain. It's a trade-off that doesn't really benefit the individual in the ways that we think. We were willing to trade privacy for the utility of free online services, and I'm not denying the value of them, as I said earlier, but there is a better way. And I think that business, to Iliana's point, there's a lot of businesses out there that would like to see a change to the status quo, because right now they're often powerless because they're themselves relying on these gatekeepers of the data.
Yeah.
There are gatekeepers, but there are also a lot of partnerships that we're starting to see the emergence of. And sometimes it's with large established companies. So for example, TD has a partnership with a Canadian organization, Flybits. And with Flybits, they're able to analyze some of the data and to change the interfaces. So if I'm using the TD mobile banking app, it knows to prompt me with specific context relevant nudges that actually make my life easier. But the way that they've structured it, I think, is a great example of the data doesn't actually leave TD. The Flybits partnership only is using the anonymized version, that I don't have to worry about the data, or is it living in one place, another place, and then a third, fourth, and fifth place as well. So I think that partnership model is an area where we're going to see a lot more in the future.
Mm-hmm.
Great.
I agree.
I think at the time now, and I think we have only like a little bit of 5 minutes left. I think we all agree that governance somehow it's key to adoption. We have talked about governance, innovation, and like in general. Maybe I would like to hear from you two quickly on example. Like, where do you see AI or blockchain really transforming financial services or other sector within the next 5 years? Where that change is going to happen? If you want to elaborate on that, maybe Alex, if you want to start.
Yeah, I'll kick things off. On the blockchain front, I think that the most interesting area of innovation is happening in a space called decentralized finance. And it's called DeFi for short. In order to interact with the world of DeFi, you need to be kind of well versed in the asset class, the digital asset class, and the underlying technology. But in the same way that in the early days of the internet, it wasn't necessarily intuitive for how people could use it. But basically, what DeFi is trying to do is to reinvent the entire industry from top to bottom. And the financial industry is this big complex thing, and it's an incredibly large and important industry, and it controls the lifeblood of the global economy, which is money and assets. But basically, it does 9 simple things. It gives businesses and individuals a way to move money, to store money, to access credit, to exchange financial assets, to tap into growth capital, to manage financial information, accounting, to handle insurance, to analyze vast, reams of financial information, and to do identity. KYC and AML are kind of really important. And in each of these different categories, there's a dozen or so emerging businesses in the world of decentralized finance that's trying to tackle that. And what's really exciting and promising about that is sort of 3 big things. Number one is that you don't necessarily need to have the same kind of identity attestations to access this as you would in the world of traditional finance, which is great for the 2 billion people in the world who are either unbanked or underbanked, and that includes millions of people in North America and other OECD countries. It's also holds the potential to reduce the cost and the friction, obviously, of interacting with big financial firms. The fees and related costs that are associated with that. And then the third thing is that, just as the internet spawned a whole slew of new businesses that we could never have imagined prior to the internet, DeFi will also lead to the creation of new kinds of services and products in the financial world, which are not currently possible in the current technology environment, the current regulatory environment.
So
I say regulations is a whole other thing, which I won't get into at the moment. But that to me is the area that is the most exciting. I'll just stay on blockchain because I'm sensitive to time, and I know Iliana will want to jump in here.
Yeah. So you're saying that blockchain is going to play a key role in transforming the financial service industry. I agree.
Yeah. Well, just to summarize, I would say blockchain is the most important technology innovation in a generation. It's the second era of the internet. The first era was the era of the Internet of Information, and this is an Internet of Value. It's a way to move and store assets, every single asset you can possibly imagine, in a natively digital peer-to-peer manner, in the same way that the internet allowed us to do that with information. And so the impact is going to be at least as profound, if not more, than the first era of the internet, because value industries like financial services are orders of magnitude larger than information industries like media, publishing, and so forth.
Yeah, I agree. Iliana, we want to go take a run for it?
Absolutely. So when I think about blockchain and the impact that it could have in the world of financial services, the biggest impact is not going to come from one organization deciding that they're going to go adopt blockchain within the four walls of their business. The biggest impact is when you have multiple financial institutions that are actually collaborating towards a shared objective, whether it's reimagining the mortgage landscape or whether it's reimagining the equity markets and all of the intermediaries and steps inside of that process. So the collaboration piece is going to be absolutely critical. The other trend I want the audience to not lose sight of is this world emerging of open banking, right? And moving back towards banks as utilities, banks as the piping and connectivity of that information flows between financial services, telcos, retailers, and other institutions. We're moving away, both of these trends point to a move away from data and silos towards data living in one place, being accessible across the board, and that spawning a whole new generation of products and services that at the end of the day make life better for consumers while also contributing ROI to the various businesses that are involved.
That's great. Well, that's a very interesting conversation. I'm sensitive of time though, and I think our time just run out. So I would just like to thank you both for very insightful discussions. And maybe you can just wrap it up here. Thank you again for your contribution and insight. Thank you.
Thanks so much for having us.
Yeah, my pleasure. Thank you.